So, what is a preferred stock? Well, preferred stock is a security that's very similar to a stock and has the characteristics or the features of a bond. Um, Preferred stocks have uh, face values. They trade like stocks, but they do have call values or call dates. And well, let's take a look at an example. Preferred-stock.com is a website that I like that has preferred stock, specific preferred stock information. So I pulled this one randomly, Washington Prime Group, and this is a preferred stock. They don't usually get a vote, and the pricing of a preferred stock is not dependent on the performance of the company. It's very much like a bond. So it pays a dividend or a coupon, and if the company does not pay the coupon or the dividend, then the whole value of the preferred stock dies. There will be no other point because the preferred stock, the only purpose of a preferred stock is to receive a high dividend or a high coupon. They're high yield instruments. They float and trade like stocks, and therefore the companies, when they issue them, they don't have to go through an underwriter like a bond. They would simply float it with their already existing stocks in the stock market. So let's take a look at this example. The very same company, very same preferred stock, the PH, trading at 21.85, very much like a stock, and it trades on NYSE, and you can see that it's it looks like a stock. They don't have a vote. Their dividends are separate than the dividends for the common stocks. They come in case of a liquidation. Preferred stocks come after, well, the first to credit holders, and then whatever is left goes to preferred stockholders, and then it goes to um, common stockholders. So they do have a little bit of a priority over common stocks. With respect to the dividends, they get a definite priority. The company has to pay the dividends for the preferred stocks first before they actually pay any coupons to or any dividends to the common stocks. There are two types of preferred stocks, cumulative or a non-cumulative. If it is a cumulative, then the company, if they decide not to pay the dividends for a preferred stock, investors' right to the preferred stock's dividend accumulates. And then if and when the company decides to pay these dividends again, then whatever has accumulated will be paid to the preferred stockholders. Um, they're usually a a feature that disallows companies to pay any dividends to common stocks if they do not pay the coupons or dividends on a preferred stock. So this example, this one preferred stock was first traded on August 3rd, 2012, and the initial amount is $25, which is very common for preferred stocks to have a face value of a $25. This is a current price of 21.85, just like we saw on Yahoo Finance, 21.85, and the 52-week low and high had a volatility between $13 and $23. Um, this pays a coupon rate of 7.5%. So, given on the risk of the company and the credibility of the company and the default risk of the company, if 7.5% is considered to be too high, then the price will go up. If this is considered to be too low, then the price is going to go down. So as you can see, the pricing of a preferred stock works very much like a bond. This one is rated by Moody's B1 or S&P B minus. So they are actually, preferred stocks are actually rated very much like bond instruments. So there's a call date. Perhaps the main difference between a bond and a preferred stock is that when a bond is called, it's called, but the preferred stock, if they have a call date, they could still survive after this date. They don't have a maturity date like a bond, so they're not really a bond. So they are a hybrid instrument between a stock and a bond. Again, the main reason for anybody to invest in these is the high coupon or high yield. I mean, this company pays 7.5%. That's significant. and the current dividend amount is $46.88 for a $21 instrument. So that's pretty high. Um, Instead of investing in individual preferred stocks, there are a few ETFs like PFF, for instance, that includes the preferred stocks of many companies. So if you were to look at the holdings, for instance, for this ETF, it's just a sample. Um, you'll find that companies like BDXA, CPN, CPK, and so on and so forth, they will actually have their preferred stocks included into this ETF. And again, this is not the only ETF that includes the preferred stocks, but having a portfolio of, or having an ETF, investing in an ETF of preferred stocks may be a little safer compared to investing in an individual preferred stock, simply because of the diversification effect. Thank you.